day, everyone, and welcome back to the channel. Today, we're diving into a real-time trade breakdown on gold, or XAUUSD. We're going to walk through the entire process, from market structure analysis to pinpointing entries and exits, and ultimately, how we bagged over 100 pips in a single trade. We're going to use concepts from the inner circle trader methodology, specifically focusing on liquidity, fair value gaps, and order blocks to show you how these concepts work in a live trading environment. This isn't just theory, this is a live, profitable trade, and I'm going to show you every single step. Alright, let's get straight to the charts. We're looking at the XAUUSD 1-hour time frame. The first thing we need to do is establish our market bias. Looking at the price action from the past few days, we see a clear high formed and then a subsequent sweep of a previous low, but what's more important is what happened after that. Price moved up, creating a significant fair value gap, or FVG, and then proceeded to break through a key liquidity zone. This bullish move, combined with the fact that we were approaching a major resistance level, started to shift our bias. The price then retraced, retesting that area of previous resistance, which now acted as support. This is a classic setup that we look for a market structure shift where an old resistance zone becomes new support. The market then shot up, taking out a previous high, a classic liquidity sweep. Now, let's fast forward to the setup for our trade. The market made a strong move to the upside, but as it approached the next key resistance level, we started to see signs of a potential reversal. We're looking for where the institutional money might be interested in selling. A large, bearish candle pushed the price down, creating a new, strong bearish fair value gap. This is a key signal. Price then proceeded to move into this newly formed FVG and an associated bearish order block. This is our point of interest. The institutional traders are selling here, and we can see it in the price action. The previous bullish momentum is gone, and the market is now reacting to this sell-side pressure. Our entry was triggered precisely as the price entered that bearish order block and fair value gap. Our stop loss was placed just above the high of that order block to protect us from a false breakout. Now, where do we target? We look for the next logical liquidity target. On the chart, you can clearly see the previous swing low that was formed earlier in the day. This low represents a pool of liquidity, a target where buyers would have their stop losses placed. We set our take profit at this level. This gives us a great risk to reward ratio, which is crucial for long-term profitability. We're risking a small amount to make a much larger amount, a hallmark of professional trading. As you can see, the price action unfolds exactly as we predicted. The market moves down with conviction, breaking through a smaller fair value gap on its way. This downward momentum confirms our bias. We can see on the MetaTrader 5 chart that this trade was successfully closed for a profit of over $100 with a very tight drawdown. The strategy worked perfectly. The combination of identifying the market structure, recognizing a key fair value gap, and entering on the reaction to a bearish order block proved to be highly effective. This isn't a one-off fluke. This is a repeatable process. You follow the institutional footprints and you trade with the smart money, not against them. So, what are the key takeaways from this trade? First, always establish your market bias. Don't just jump into a trade. Second, look for high probability setups. This means identifying fair value gaps and order blocks. These are the footprints of big money. Third, always set your stop loss to manage your risk. And fourth, target logical liquidity levels. These are the areas where the market is most likely to move. By combining these principles, you can significantly increase your win rate and profitability. If you found this breakdown helpful, be sure to hit that like button and subscribe for more content just like this. And let me know in the comments what other pairs or concepts you'd like me to analyze next. Until then, trade safe and I'll see you in the next video.